Hello, everybody. Welcome to the Fundamental Analysis here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind that no one trade is guaranteed to profit. There's risk with each trade that you take. I think we all understand that. The important thing is to go about risk management in a way that makes sense for you. And we'll go over some ideas in that regard with some tools that make the risk management side of things easier within our web trader. And those tools are also found in our mobile app as well. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log in to our web trader. Just like our app, the web trader allows you to trade on MT4 and MT5 accounts from one location, so you don't need to switch between different apps or different platforms. And you can also switch between your demo accounts and your live accounts all from one location. And what's nice is the same tools that you see in our web trader, you will also find in our mobile app in terms of the free signals, the market news, etc. And so to log into our web trader, you just go to the upper right corner here, click log in and enter your details, and you'll be in our web trader platform, which looks like this. Now, given that this is a fundamental analysis webinar, our focus will be largely on some strategies that you can utilize fundamental news to assist you with your trade decisions, but we'll also obviously take a look at the technical analysis side of things as well to zero in on potential entry points, exit points that make sense, and also maybe for confirmatory movements with what you feel the fundamental news should bring. And that kind of puts together more than one tool then to help build what you'd call a trading strategy rather than just using one bit of news by itself. And so where we can start is on the economic calendar. It's a pretty simple but advanced tool that we offer in terms of the economic calendar. And if you've been into trading much at all, you've seen economic calendars in the past, I'm sure. And you might be thinking, well, what's the big deal? It lists the economic announcements and tells you the numbers as they come in. The special part of this economic calendar is the fact that we can look back at the past announcements, the past movements, and kind of data crunch to see what are the tendencies based on how the announcements come in terms of the movements in the past, both directionality and in terms of how far the movements went. And so you can pick the date range that you want for the economic calendar. You can pick the countries that you're interested in looking at announcements from. And you can also pick the level of the announcement, whether the importance level is high, medium, or low. Typically, we look at the higher level announcements for more sustained movements on the charts. And I've included the medium level as well. Now, for anyone who hasn't looked at an economic calendar before, basically, we can see a few bits of data. We can see the prior numbers that came in for any particular announcement. That's this column here. We can see the forecasted numbers for the current announcement in the middle column here. And then when the numbers come in, we see the actual numbers come in for the current announcement. And largely what we're doing is comparing the actual numbers to the predicted or forecast numbers to see, are they better than expected, worse than expected, or as expected, and how significantly different were they if they weren't as expected. Now, if we want to take a look at announcements that haven't occurred yet today, there are some large ones upcoming. Specifically, we can look at the interest rate decision out of the euro area. Now, the interest rate is expected to be held steady at 4.25%. Sometimes, in rare occasions, really, the actual number is different than the expected. Typically, the market has a pretty good idea as to what's going to happen with the interest rate. In this case, it's believed it will be held steady. You'll get a bigger reaction if that doesn't occur. If this came in, say, at 4% or 4.5%, lower or higher than expected, you would likely see a rapid movement of euro pairings on the charts. And typically, if the interest rate comes in higher than expected, you'd have strengthening of the currency. in this case, the euro. And if it came in lower than expected, you might tend to see weakening of the currency. Now, what about if it comes in at expectation? Let's take a look and see. Rather than guessing what we think should happen, we can use these tools over here to see what has actually happened in the past. And so I can pick my currency pairing. In this case, I'll have pairings with the euro, since it's a euro area announcement. So I can pick any of the available pairings with the euro. And so I think I'll leave it on euro USD. That's a popular pairing to look at. And we can look at different time frames after the last announcements. These dates listed here are the last time that a rate decision came in the euro area. And so we can see almost 2/3 have dropped compared to those that have gone up in terms of the euro USD movement after the numbers came in. And that's looking at all events. Now, if we say how many came in above forecast, none. None of these in the recent history in the past year or so have come in different than the expectation in terms of being above the forecast. Below the forecast, again, none of them came in below the forecast. So that tells us they all came in as predicted, matching the forecast. And when that has happened, nearly 2/3 of the time, the euro has actually weakened against the USD, with the euro dropping, these red candles, against the US dollar 5 out of 8 times. And 3 times it went up. So what we see here is, for whatever reason, the statistics show that if you could maybe catch a spike up, if this rate decision comes in as expected, and you can catch a high point, it looks like more times than not, you're going to end up down after 4 hours, okay? The range movement is a little over 72 pips in those 4 hours. So you could say, well, in the first 5 minutes, what kind of movement can I expect? And we're looking at only 16 pips range movement in the first 5 minutes. So it's not like you don't have time to place the trade after you see the numbers come in. So if we're watching this announcement in a little while, and it's coming today, if it comes in as expected and we see these green candles go up, or we see the downward movement be very small, we see the average range movement only 16 pips in the first 5 minutes, then perhaps you're interested in going after what we see after 4 hours in the past, almost 72 plus pip movement after 4 hours, with most of them ending up down. And especially if in the first 5 minutes, perhaps you could catch one of these upward movements before the dropping occurs. Or if it's already starts down, it hasn't gone that 20, 30, 40, 50 pips yet, and it's within a small range movement in that first 5 minutes. Perhaps you're interested in going after what has occurred then almost 2/3 of the time in the past, which is larger downward movement compared to the upward movements. Okay, and we can look at another example. You could focus on what they call the deposit facility rate. This also is expected to stay flat, and the movement may be similar. If we look, how many came above forecast? None. How many came below forecast? None. They all matched the forecast, and about 2/3 of the time it dropped. Okay, and you're seeing similar statistics because they both are coming in at the same time, and they both tend to be as expected. Okay, now we can move beyond that and look at some announcements out of the US, which are high-level announcements. If we look at perhaps the initial jobless claims, there's been a big focus in the US on jobs data to see when will the labor market maybe slow down. If we just look at all events, it looks like the euro tends to climb with this announcement. We're not singling out whether the numbers came in higher than expected or lower than expected. Just overall, 2/3 of the time, the USD has weakened with these jobs numbers coming in, and the euro has climbed. And we can take a look and say if this is above forecast, it's 67% to 33% with over 44 pip range movement. If this is below forecast, it's also 67 to 33%, but it's a much smaller range movement, 34 pip range movement. And look how small these upward movements are. Very small upward trajectory on these green candles compared to when this was above forecast, larger movements upward. Okay, so you take these statistics and you decide based on how the numbers come in, how would I trade if I'm going to use the past as a guide. And so this is referred to as data-driven trading. And basically it's taking the emotions out of it. You're taking a look, you know the range movement that might be expected, so you know how far away you might put your stop loss in advance and your take profit. You know the direction that the majority of the time it's gone in the past based on how the numbers came in. You obviously don't expect you'll win every time, but if you try a strategy like this on a number of different high-level announcements, maybe you find certain announcements give you better results than others, and you zero in on the ones that give you the best statistics. And honestly, if you can win 6 out of 10 on a regular basis, you can have a nice return, okay? Or 7 out of 10 would be even better. And so you go after the announcements that tend to give you the best movements. And you might see that announcements that aren't today, like CPI data out of the US or manufacturing numbers, maybe you see better statistics on those. But you can plan your whole week out, pick the announcements that show the strongest past statistics in terms of predictability, in terms of the direction and the size of movement, and you can plan your week out with these announcements over the weekend, Saturday, Sunday, looking at the upcoming announcements and be ready for the upcoming week for exactly which days and at what times you'll try this strategy. And it's just one strategy as a part of maybe a diversified portfolio of strategies that you can trade with. Okay. If anyone has any questions on how to use this, if you want me to repeat a section of it, just let me know. We also have a press conference coming up. Now, press conferences don't have numbers, right? You see here, there are no numbers listed from the last one or the expectation because it's a press conference. And that's at after the interest rate and deposit facility rate numbers come in here, then the press conference comes after the US announcements. And so if we take a look, what has happened with the movements with the press conference? You know, in the 4 hours after the event, 3/4 of the time, that's 75% of the time, the euro has weakened and the USD has pulled it down. Okay, and remember, every one of those announcements in the past came in as expected with the interest rate decision. And so if it comes in that way again, if the initial movement is the euro climbs and then we see later during the press conference, there tends to be a correction back down, 75% of the time downward movement, then maybe that statistic gives you an easy 1-2 move with the interest rate maybe in one direction, and during the press conference, it looks like the majority of the time, maybe in the other direction, okay? And you can check different time frames. 1 hour after, it's 50-50, right? So it took a while to get going. So within the first hour, you could catch these upward movements. And after 4 hours, most of them tend to be down. Okay, so you can play around with the time frames to see when in the past would have been best to get in. Look, after 30 minutes, look how much upward movement. And then after 4 hours, look how it flips. Most of it's down. Okay, so, and you can play around with the time frames. In the first 5 minutes, we have less than 5 pip range movement, 4.48 pips. You see these numbers are really small. The candle looks big, but it's less than 5 pips to the end of even this largest candle. The one going up is just barely over 5 pips. And then after 4 hours, we're talking 59 pip average range movement. These have dropped then over 50 pips on this one, over 80 pips on this one. Okay, you hit on just a couple of these and it makes up for 2-3 losses that might be shorter distances in the other direction. Okay, and the majority of them dropped after 4 hours. So very powerful data that you can use here and pick and choose which announcements you think look like have the strongest data, and then you can take your shot to see week after week, how do these announcements turn out for you statistically? And like I said, you'll zero in on the ones that work best for you, for your style of timing and patience, etc. Okay, so the question I'm seeing is how can we know clearly whether it will be bullish or bearish after the news? What we're looking at is the data, and so we can clearly see the statistics can show a trend in a certain direction overall, but it doesn't mean that you're going to know when you say clearly. It doesn't mean you have certainty that for sure it will go that way this time. Okay, this is how statistics work. You have to get kind of a large amount of data points and don't expect that it's going to go your way every time. And if you try it once and it loses, doesn't mean it's not a good strategy, because you might try it 10 times and see that it wins 6 out of 10, 7 out of 10, something like that. So I would say don't go all in on one move necessarily. Go after a reasonable percent risk and percent gain as a goal, and give yourself multiple attempts to see how does this strategy work out. Okay, but to answer your question, you can see in the statistics, for example, when we were looking at the press conference, that clearly this is a bearish movement for the Euro USD in the hours that follow after the press conference. Statistically speaking, 75% of the time it ended up bearish. Okay, good question. And so what else can we look at for fundamental news help besides the economic announcements? Because you're not always available when the announcement occurs. There might only be a handful that the time of the announcement you might be available for to watch the numbers come in and to trade according to the statistics. But you only need a handful for that to be part of your set of strategies, to do a few of the announcements that work best for you in terms of your schedule and the statistics that you may like best. Now, we also have some other options for fundamental news. We can go to the market buzz, is one in particular that I like. And so when we look at the market buzz, what it does is it's organized by instrument class. We can switch between different types of instruments that we offer: commodities, indices, stocks, etc. And the larger the bubble in the pictogram, the more we found online that the instrument is trending. There's news that we've found about it. We all know NVIDIA has been in the news a lot lately, ever since the big revelations about the AI industry, and it became more common knowledge about it. Really, AI has been around for years, but in the past year or so, it's become more prominently known, and NVIDIA, being a big maker of chips for that industry, has been in the news a lot. And we can look at others that are trending less, but still trending well: Apple, Microsoft, Tesla. And so let's say you're interested in one of these, you just click on it. And what happens when you click on that instrument is it will load a page dedicated to that instrument and helping you to decide whether you want to trade on that instrument or not. So first of all, remember I said the technical analysis goes with the fundamental news, okay? We can take a look at the trend analysis for Tesla. We can get a signal on it. Signal says buy, okay? It's got a pivot line here, this blue line. If the movement goes below that blue line, then the signal says sell and expect further downside towards these red lines. As long as we're above the blue pivot line here, the signal says that they expect this to rise up towards the green lines up here as high as 292. Okay, these are resistance levels further back in time on the candlestick chart. And so if it does go up, they're saying you might think to take profit between 280, 292, somewhere in this range up here, because the expected movement is over 23% further rise. Okay, boy, I've seen a number of these come to fruition. NVIDIA, it kept calling for more rise, and it kept going, and it kept going, and they kept calling for more, and it kept going. At some point, it'll miss, right? These trend analyses, the analysis can't be right all the time, but the trend analyses have done quite well on a number of these instruments. Now, beyond this, we can say, okay, the technical analysis may show that it should rise, but what about the news? And that's what we have over here is a news feed dedicated to Tesla or to the industry that Tesla's in. Sometimes the articles might not mention Tesla directly or Microsoft directly, whatever stock or instrument you're looking at, but it'll talk about things that are related to it. Here I see the articles are actually talking directly about Tesla. And so you can read articles that have come out most recently, 3 hours ago, 4 hours ago, they're time-stamped here, and see, does that make you feel like this trend analysis is more correct? Does it give you confidence in it when you read the articles? Or does it work against what you think this trend shows in the signal? And so what I like to do is read the most recent news, and when you read the articles, hopefully they help convince you that, hey, the trend analysis looks like it's good. I mean, if the technical analysis says it will go up 23%, then you read some articles that talk really good about what's going on with Tesla, then maybe that's enough to convince you to go ahead, in this case, when the US market opens, to buy on Tesla, since that's what the signal is saying here. And maybe you read some articles that convince you of that as well. And it can be the opposite also. You might read articles that are talking about recent bad news about Tesla, and you'd say, okay, I'll pass on this recommendation of buying on Tesla if the news kind of contradicts the signal. And sometimes the trend analysis came out before the most recent article. So it makes sense to read the most recent news to help you out before you decide to place a trade. Okay. If you want to read the article, you can click on the link. It shows you a summary of the article, and you can also click Story Continues to get the full article. Okay, you can see the source of the article and read the entire article to understand more about it. And then you're more informed to go ahead and decide whether you want to follow this trend analysis or not. Okay, again, we're combining tools. We're combining signals, the technical analysis, along with the fundamental news to help decide, is this something that I think is the right move or not? Okay. Any questions on anything we've covered so far? I'll pause for a moment. Okay, so I don't see any new questions popping up, so I must have been clear. So what we can do is then take a look maybe at some different instruments that may or may not be moving with nice trends, after we take a look to see if there are any articles that have come out recently in the market buzz. And so one thing we could look at is maybe some commodities. Let's see if there's anything about gold is trending. Now, what we see here is the first article, gold prices in Pakistan soar to new high. Well, that sounds bullish. Gold prices have hit a record peak in the local market, sparking interest among investors and traders globally. The price of gold per ounce increased by $60, reaching $24.70. This significant rise was mirrored in the local market. So you could go on and read that whole article. All right. That sounds like a bullish article about gold. All right. We don't have a technical signal here on gold, but perhaps we'll find one when we go to the other section. Rather than the trend analysis, let's just see if there's a signal on the main trade page for gold. And so now I can see there is a signal. And if I click on that signal, now I see that it is saying from Trading Central, from a technical perspective, it's a buy. Okay. The pivot level's down here at 24.52. The way this pivot level works, it's a support level from the past where the price hit and went back up. If this drops below the pivot level, then they say it's a sell signal. So you could have a pending order down below 24.52, let's say at 24.50. If it hits that price, then you could sell with take profits down towards 24.30 or a little higher. That's the recommendation. If it does drop below the pivot, that you could sell and look for further dropping down towards 24.30 potentially. Currently, it's still a buy signal because it's above the pivot, has not broken that support, and they're looking for further upside towards 24.83 up to 2,500 even. Okay, so we could draw those lines out on the gold chart. Since the article that we read, and this is only a simulation, right? And I would recommend read more than one article. We went through and looked at the first article. It sounded bullish. Let's assume we looked at a couple more and they were also bullish articles about gold. Then we could go ahead and look at the signal and see that the recommendation is to buy on the signal and put those together and decide, does that convince you enough to make a move in the buy direction? And let's assume that it did. So then what we can do is start to scope out these price levels. 24.52 is that pivot level from the signal. That's down here. And now we can see exactly why. Here's 24.52. There's the support level that if it breaks below there, it must be a downtrend then. And so these price levels are strategically placed based on old support and resistance levels. Now, the first take profit level on the upside is 24.83. Let me go to larger candles to bring that into play. One day candles, 1 week. Because we're near all-time highs, we're not going to necessarily get much above the candles that we're looking at here. I can just drag that down a bit. Now, let's go back to 4 hours to zoom in a bit. So what we can look at is there's resistance here. Okay? This is where it hit and came down, hit and came down, hit and came down, up at the all-time highs. Okay? Not that long ago. And so we're looking, and the first take profit in the signal is 24.83. That is right here, right at the top of these wicks, 24.83. Okay, so you can begin to see when these signals are sent, they're based on the technical analysis, the support and resistance levels, the pivot levels on this support here where it hit and bounced up. If it goes below there, they say sell, don't buy anymore. It's a buy signal, and they're saying you might take profit at this first resistance level here. If it breaks that resistance, then there is no other resistance. We're at all-time high territory. So the next recommended take profit is at 2,500 even, and I would say they picked 2,500 because it's a nice round number. Many times, round numbers are spots where there are at least temporary pauses in momentum. So if it breaks 24.83, the next round number is 2,500 flat. And so in that zone is where they recommend a take profit on this buy signal. Now, fundamentally speaking, the US dollar was strengthening a bit yesterday. The housing data was a little stronger than expected out of the US yesterday, which is why the USD pulled gold and some other instruments down. Now today, leading into the jobs numbers, some other information coming out of the US, if that data comes in weaker than expected, gold could probably more easily rise back up to this all-time high and potentially break it. What could work against this trade is if the data today out of the US comes in stronger than expected, that could again cause a strengthening of the US dollar and work against a buy on gold. So there's some unknown to come later today because there are announcements that we don't know for sure what the announcements will be. Okay, so if I was going to make this move, I would either plan on getting out before those announcements because I don't know how the announcements will come in. Maybe the anticipation right now is that they'll be weaker than expected, but they could actually come in stronger and work against a buy here. So if you're buying, you might look to try and take profit at the first level if it gets there before the announcements, or to take profit at any level of profit before those announcements come in out of the US in just a couple hours time. Okay, so this in my eyes is a short-term move right now. to try and ride this upward momentum towards this resistance, but it's risky to take it through those announcements that are coming. And I would be switching out of this trade and into the strategy we opened the webinar with on the economic calendar, with trading on the announcement itself after the data comes in. Okay, based on the data-driven trading. So this is a move you could get in now, maybe thinking about getting out before the announcement, and at the same time, then you've got the strategy to trade on the announcement or announcements as they come in. Okay, so Michael, you're asking about the web address I'm working from. This is AvaTrade's web trader platform. You get into it from here, avatrade.com. You log in, and you're in the web trader. You obviously have to open an account with us first. Okay. All right. So, any questions, comments about what we've covered so far? And again, in my eyes, this buy move, if I was going to do this, is a short-term move. I'm looking to get out before those announcements today because they could work for me, but I don't know what the numbers will be for sure, and they could work against me. So this looks like upward momentum. It's a current uptrend, hasn't reached the resistance yet. The signal says to buy. The article we read says probably buy on gold, but it depends if you're a long-term, short-term type trader. You might wait for the announcements if you're more of a long-term trader on gold, just to see which way it throws it before you get in on a longer-term move. But this looks like you have a couple hour window before those announcements for a scalp type move on gold. Okay, I don't see any other questions popping up. I think it's a good place to stop. And by the way, I wanted to walk through, let's say you're going to trade on this. For anyone who's new to our platform, let's say I was going to take profit at 24.83, if I'm taking this trade now, right at the resistance, and then my stop loss is down. If I go to 5-minute candles, 15-minute candles, I could say 30 minutes. If I'm buying on this, I might say as long as it doesn't break below the next support level. I see support here. This is earlier. It hit once, twice, and then went up. So as long as it doesn't break below here, maybe I'm happy to stay with the trade. So 24.59. So if it goes below 24, say 57, maybe I decide I'm out on this trade. All right, so my potential profit, almost 8,000. My risk, about 2,500, a little less. So you see how this is calculating for me, the risk management side of things. Now I could go ahead and say, I don't want to risk that much. Maybe I do one lot, and it adjusts. It tells me, okay, now I'm risking 621 to make almost 2,000. That's less than 1% of my balance. So maybe I'm comfortable with risking this amount, less than 1%, to go after nearly 2,000, which is over three times the risk for my potential profit. So it's a nice opportunistic setup. And if that's the case, then I can go ahead and buy with this move with my risk and reward completely understood before I even get into it. Okay, so the risk management side of things, like I mentioned at the start of the webinar, is made much simpler with the tools that you have within our order window, because it calculates the exposure, it calculates the potential profit, it helps you adjust on the fly with the trade size so that you can zero in on exactly how you want to set it up in terms of risk management. All right, everybody, thank you for joining. Hopefully you can take a look at some of those announcements coming in still today. Maybe you make some moves if you like the data-driven trading ideas that we went over. And also you can keep an eye on the market buzz, see if any big news comes in on something that you might be interested in trading on. All right, everybody, thank you for joining. Good luck with your trading. Bye for now.